Welcome to BigONE Weekly News Update. I'm Mia. Crypto markets moved sideways last week, but beneath the muted price action, ownership trends and market structure continued to shift. Bitcoin slipped 0.5% to around $77,000. Ethereum fell 1.4%, near $2,100, and Solana traded flat around $85. The standout was Hyperliquid's HYPE token, which surged nearly 40% on the week and is now up roughly 150% year-to-date. Macro markets remained stable. Technology stocks continued to lead global equities, pushing the S&P 500 to an 8-week winning streak, while the Nasdaq and Europe's Stoxx 600 also advanced. Treasury yields eased slightly, oil prices dropped nearly 5%, and signs of progress in U.S.-Iran negotiations helped support sentiment. Meanwhile, comments from Federal Reserve Governor Christopher Waller reinforced expectations that rates could stay higher for longer. Retail replaces institutional Bitcoin demand. New 13F filings revealed a notable divergence in Bitcoin ETF ownership. Institutions reduced holdings by roughly 26,700 BTC during Q1 2026, while retail and smaller investors added around 19,400 BTC. Much of the institutional selling came from delta-neutral firms, such as Millennium Management and Jane Street, which rotated capital into better commodity arbitrage opportunities as crypto basis yields compressed. The shift suggests Bitcoin ownership is gradually moving away from fast-moving institutional capital toward longer-term holders. Ethereum faces growing pressure. The Ethereum Foundation continues to face criticism after 8 key members departed in the past 5 months. At the same time, Ethereum's traditional fat protocol narrative is weakening as applications capture more economic value, leaving ETH's role increasingly unclear. Going forward, Ethereum may need a stronger narrative around scalability, privacy, AI-native infrastructure, and post-quantum security. Crypto lending slows while stablecoins grow. Crypto lending activity continued to contract in Q1, with both CeFi and DeFi borrowing volumes declining. Platforms like Aave posted a second consecutive quarterly drop. The exception was CDP-backed stablecoins, where supply grew more than 26%, highlighting continued demand for on-chain dollar liquidity. Crypto expands beyond traditional finance. Regulatory and infrastructure developments continue to push crypto deeper into mainstream finance. President Donald Trump signed an executive order encouraging broader fintech and crypto access to U.S. financial infrastructure. At the same time, crypto-native platforms are expanding into private market price discovery. Trade.xyz launched pre-IPO perpetual contracts tied to firms like SpaceX, while Polymarket partnered with Nasdaq Private Market on valuation prediction markets for companies including OpenAI. Conclusion: despite relatively quiet price action, crypto markets are undergoing meaningful structural change. Institutional positioning is shifting. Retail participation is rising. Ethereum is searching for a clearer identity, and crypto infrastructure continues expanding into areas traditionally dominated by banks and private markets. The market may appear calm on the surface, but underneath, the next phase of crypto's evolution is already taking shape. Join BigONE today and take advantage of the growing cryptocurrency market.